think it's so cliche, but the ironic thing about cliches is that they're often very deeply rooted in truth, where like every week does feel like months of progress. It feels like every week we get a new model from one of the big model builders, and that every week that new model has significant advancements.
Welcome to DeepTech, as in deep tech with the same Gene and Doug, but not the 315, because as we've had our enjoyment of doing deep tech over the years, we've gotten some feedback that people wanted Doug and I just to go longer, more than 15 minutes, and go deeper into some of these topics. So we're going to be experimenting with that. And here's our first episode. And we got, I think, a mother of an episode, which is related to where are we in the AI trade? And just given everything that's been going on, we just wanted to kind of dive deeper into that. And so just to give you some context, I'm going to look at some notes here in terms of what has happened year to date with AI in terms of the public market, using that as some sort of benchmark to how investors are thinking about this trade. Is that in the first part of the year, basically the month of January, which was pre-DeepSeek. DeepSeek was late in January. The AI stocks were up 15%. The NASDAQ up 4%. So strong start to the AI trade. DeepSeek comes out, and we'll call this the second period, the DeepSeek to the tariff period. So basically end of January to April 2nd. That had a big impact, that DeepSeek moment, the AI stocks, and this is a group of what we think are the 10 most relevant AI stocks, was down 22%, the NASDAQ down 12%. So we could see that shift in terms of how investors are thinking about this. And then from April 4th to today, we'll call this the tariff period, not specific to tech, but just the broader conversation. AI has been hit harder, down 19% as of this recording, the NASDAQ down 13%. And so you can kind of see these three chapters playing out, how that momentum from 2023 and 2024 carried right into the first month of 2025. And then we've had kind of two short circuits to the conversation. If you go back and look at, if you're curious, if we take that bucket, those 10 stocks, and we go back and look at what they've done since GPT kind of came onto the scene late in 2022, they're still up 200%. And so I think a lot of people made a lot of money in these, and that creates some tension because since I've made some money, now I'm starting to see some potential cracks into how this is going to kind of play out. So that's just the highest level. So we're going to take a step back, and Doug's going to walk through just our thesis in AI going into, we'll say DeepSeek, what that thesis was originally.
Thesis going into DeepSeek, and I would say the thesis is still the same right now. It hasn't really changed much for me, which is zoom out, you look at the next 2 to 4 years, and I think we still believe at Deepwater that we are going to have a continued investment into this AI opportunity. And ultimately, I think we will culminate in a bubble. We've kind of been saying that word shouldn't be exciting or scary. It's just kind of a reality of what happens when you get these new technological paradigms that come out. They almost always come with bubbles, and there's a lot of structural reasons for why. But that's still our thesis. I think with DeepSeek, that was, in my opinion, that was really the first time where we had this kind of scared mindset, this hit to the armor where people just weren't really sure what to think, right? Like, was GPT over? Was all this investment for naught because DeepSeek seemed to come out of nowhere? And I think now, a couple months past the DeepSeek issue, it seems pretty clearly that DeepSeek is not certainly as much of a competitor as maybe we thought it was when that news first hit. And even today, right, the pace of evolution of these models continues super rapidly. OpenAI just launched GPT 4.1. So we've got another new model now on the frontier to talk about. And so that for us, I think, is very simply the thesis. 2 to 4 years, AI bull market culminates in a bubble. And I think that this is just one of the bumps along the way to that.
So there's a lot there, and I want to break them down here. I start with DeepSeek. Is when the news came out you flagged it like a week before through your work with our work with Intelligent Alpha and using these models, that there was this screamer of a model coming out of China, and then it kind of hits the mainstream, and we're scrambling to figure, was it whatever was that 5 million number of what they trained on, was that a real number? I guess like 2 months after, I feel like we know more, and my takeaways are that they probably trained on a much bigger number, probably more than 100 million, that some of those costs weren't being properly allocated. Second is that it learned through distillation, which is essentially learning from, it's shocking to me that GPT allowed this, but learned through asking GPT a lot of questions, mostly GPT. And then the third is that kind of important piece around, it's still not the most cutting edge model, but like, how do you think about what we learned about DeepSeek here 2 months later?
I think the probably two big lessons are: one, there were and probably still are things that can be done in the broad AI building world whereby we get more out of less. So did DeepSeek have as limited of resources as I think the initial reports sort of intimated? I don't think they did, to your point. Obviously, some of the techniques I think they were using helped them circumvent some of the necessity, some of the need for advanced resources. But I think that they did prove there are some breakthroughs that you can kind of get in terms of some of the floating point, right? Reducing the size of some of the data that was going into the models and still getting good results. That's point one.
Well, on that
Point two,
front, on that point one, and some of the
yeah.
technicals there, because there was some advancements there. I don't want to totally downplay it here, but if you're a hyperscaler, you knew about this a year ago, probably, that this was something in the works. And if you looked at those technical advancements, how does that play into how they view and interpret what DeepSeek has done?
I don't want to speak for them, only because I think that they've probably put some of their own words out into the world that would be better than my interpretation of them. But I would think of it in this way, and I think Anthropic probably gave the deepest sort of explanation, sort of post mortem on DeepSeek a couple weeks after it came out. The CEO wrote a memo that I remember reading, where basically he did say, look, like DeepSeek, the reasoning model, I think had come out about 4 to 6 weeks before it became this weird issue in the market. And their non-reasoning model had come out even before that. And so some of the things that DeepSeek had done, the innovation, some of the efficiencies had been out there in the world for a while. And what the CEO of Anthropic said, Dario, I mean, he basically said, we are aware of these things that we're experimenting with, right? They're going to work their way into our models. But I think the bottom line, though, to that whole exchange was that, yes, these efficiencies can help the models work a little bit better. Can they really enhance frontier intelligence? I think the answer was no. And those two goals can be different things.
And that frontier intelligence is what at least the hyperscalers are racing towards too, which I think is an important distinction here, at least that I've taken away from the last 2 months too. But I interrupted. You're talking about other things that we can kind of take away from the DeepSeek moment.
Well, I think that kind of leads into what the second point was going to be, which is that frontier intelligence, I think we could say this pretty confidently now, still relies on massive access to compute, massive access to data, all of the things, some model advancements, right? All of the things that we thought were the components to frontier intelligence before DeepSeek came out. I think those are still the components today. And I don't know that they've changed a whole lot in terms of order of importance. I think there's this debate, now, and it was a debate before, how much is access to compute the most important thing versus, data, whether that's synthetic data or whether that's, expert data now is becoming a more important thing. That we're going to debate forever. But I think those elements, that would be the second takeaway from DeepSeek, those elements are still the things that will create frontier intelligence.
Anything more on DeepSeek?
Nope.
Is there another point? I want to go back to this idea about the being on the cutting edge and the most advanced models and the cost of like being a step and a half ahead of everybody else. is massive. I mean, that's that where a lot of the capex is going into. And as we think about, let's say, the five main models that are going to power the Western world, like is this truly like a race to get to general intelligence? And is, what is the long-term advantage of ringing that bell first? Because someone's going to ring it first, and then probably 2 months later another one will have like, when is that point too of general intelligence? But like, do we really need to have the most cutting edge models, like, in order to build a big business around it?
The answer is yes in certain cases. And let me just step back before I'll give you a very specific perspective on that from Intelligent Alpha, the work we've been doing using AI to make investments. But you mentioned like kind of five companies powering the Western world. I actually think on the frontier side, it's probably three if you really categorize, build a mental model for the players in the space. I think the three that are really trying to lead in the frontier are GPT, are Grok XAI, right, and Google with Gemini. Anthropic is in that mix, but my thesis has been, no knock against them. I think they do great work. I think they have a different access to capital compared to XAI and OpenAI. And so it's going to be harder for them to compete over time, just because I think it's going to be hard for them to raise as much as those other companies do.
And
on
Llama
the
doesn't
open
land
source
on the
side,
list.
well, yeah, Meta. So I actually put Llama in a different category. I actually don't know that Llama's purpose is to be on the absolute frontier.
Right. It's
I think
AI for everybody.
it's AI for everybody. And I've been trying to break the market down in these two components. And a lot of our discussions have kind of navigated around this. Like, there's frontier intelligence that requires frontier models, and those will always be the smartest, most capable models, period. And then there's an idea of around like commodity intelligence, right? Where the intelligence, it doesn't have to be a 150 IQ person. It can be a 100 IQ person that handles an
That's
average
DeepSeek.
task just fine. Well, it could be DeepSeek, or I'm thinking more Llama, but I think
Okay.
open source in general, I put in more of the commodity intelligent bucket right now, because in our use of the models at Intelligent Alpha, like, we're just not seeing the same level of intelligence, the same level of output as we are from the frontier
Those
models.
three. And
Exactly.
when we think about that more everyday intelligence, those models, is that like a smaller opportunity to build a business around them because they'll be more commoditized?
I think it probably will end up being that, yes, because what I think, if you, again, like, separate the world in those two buckets, what are the tasks that really need frontier intelligence? So the smartest, most capable models, right? That's going to be stuff like anything you're trying to do in science. Coding probably fits in that bucket now and will for a long time. Forecasting, doing investing work.
Right.
You always want the most smart person. If you were
There's a
to
lot of
imagine these models
forecasting
as
that goes
persons,
around. We're not just talking about weather here. I mean,
yeah,
this is pretty much every
forecasting of
business has
anything.
some form of probably, yeah,
Yeah.
every industry has some form of forecasting.
Yeah, and if you can think about it very simply, you can ask yourself, does any given application need frontier intelligence? You can ask yourself a question. Does a very small amount of incremental alpha, is it worth a lot of money?
But
Yes in
you can even,
investing, yes in forecasting, right? I think yes in coding, yes in science. So you want to use frontier models for that, and you don't want to be behind.
but I would even argue,
But
I'm at the risk of highlighting one industry. I'm just going to mention one that there's been more AI use of, let's say in the customer support side.
yeah,
But even on that, like, I would think, like, if we had a business and we wanted to use AI in customer support, it wouldn't be we wouldn't be thinking about, let's get an agent in there that answers the question. That would be nice. But we'd want an agent that can upsell and can understand like some of the nuances beyond it, and to be that super AI agent. And so I guess my point is, like, does anybody really want the stuff that's more
right.
mainstream? Like, we're all going to want the
Yeah.
best stuff, won't we?
I think the answer to your question is a today versus tomorrow view, which is today, to do the things that you're saying in customer service and make it feel natural.
Right.
I think you do need frontier intelligence to do the upsell, right? Not just to handle a problem. I do think, though, in the future, a commoditized intelligence will probably be able to do things like that. And again, like I think the easiest way to separate these is to think of the models just like humans, right? Like you would want the 150 IQ person trying to solve investing, trying to solve science problems, right? But you don't need the 150 IQ person to try to upsell you to a better cell phone
Mhm.
plan. A 100 IQ person can do that. And that's how I would structure the
And from
difference in your mind between those intelligences.
and you just mentioned it too, but back to this idea of where like value is going to be created for investors ultimately. Is it the 150 IQ model that's going to, is this like the iPhone where iPhone, what does the iPhone have? 120% of all the profits of the smartphone industry or something like that.
Yeah.
Is that kind of how it works? Is that, you'll be able to charge a boatload, you being whoever has these models will be able to charge a boatload for that most advanced, and the rest of it's going to be pennies on the dollar.
I think that's probably kind of how it works out. So yes, on the frontier intelligence, anytime you have a world where you can apply the models and create much more economic value, then that model ultimately should find some way to capture some of that economic value. But where the economic value is maybe a little bit more, smaller on the commoditized intelligence side, I think then you probably are going to have a lot of different models, that are all fine and capable, but I think it will be hard for businesses to make a ton of money that make those models just by nature. And they're already open source, right? I mean, I think that that world already accepts that reality.
Right.
Anything that's been open source, you could have, hosted infrastructure, right? Maybe you make some money on that. That's totally fine. But it will be different than, massive API calls on the other side from the frontier models.
So that's a compelling case that we need, or that there's going to be this race to general intelligence. And from my perspective, I don't think I mentioned the bell. There's no bell that goes off when we hit general intelligence. It's just the ability of these models to think across many different industries at the level of a human. And right now, a lot of the benchmarking that's done on these models, it feels like they're done more like on a specific benchmarking to some sort of a generic intelligence level, probably like an IQ test, effectively. But
Yeah.
I think it kind of in the real world, like this is going to be kind of a gray entry into general intelligence.
Yeah, and I think the benchmarking probably at some point will need to evolve into
Right.
something that
It's
is
getting rigged
more
right now too,
human-like.
isn't it? People kind of, they gamify it.
Yeah, I think so. Well, I mean, I think if you're a model builder, you're going to try to test your benchmarks before you ever launch a new model. And if your benchmarks aren't good, you're going to go back to the drawing board. And so, it's not. I don't know if I'd say it's gaming so much
Yeah,
that
gaming
it's
is not your
right. Like, yeah, you're managing to it. You're
right.
managing to the number to make sure that you look good when you come out of the gate. But I think to your point though, I think you're making a really important point that hasn't necessarily crossed over into like the mainstream thing, which is that the average human that's using AI, like they don't even have any idea what these benchmarks mean. They don't care. It's more of this intangible thing, right? Like, is the
Do I
model
trust it?
useful to me? Yeah. Do I trust it? I think memory, right? We just got memory from OpenAI and GPT. Like, can it remember conversations in a useful way? Like, that stuff's really hard to benchmark. But from a feature standpoint and a usability standpoint, that's the stuff that's really important.
And from like the hyperscalers, as they're rushing to this gray finish line, how do you know when to slow down the spend?
Yeah, I don't know. Yeah, I don't know if you do know when to slow down the spend.
Well, we know now there's too much pressure on each other for this to back off anytime soon. Because you're
Yeah, I think
basically, I think in one of our internal meetings recently, you said it would be like company suicide if you'd back off some of these targets right now, some of these spending goals.
totally. We've talked about it as like this Pascalian wager or mutually assured destruction, right? You can think about it in nuclear terms of 70 years ago. But I think Mark Zuckerberg in particular feels like he is willing to really make a huge bet on
Yeah,
creating AI.
and he's done it
Um,
before.
and he's made the huge bet on the metaverse before. And I think it's one of these scenarios where so long as one of them is not backing off, none of them can back off,
Right.
right? Like they either all have to back off and slow
But
down
also
or none of them can.
if one of them, if all of them backed off, then probably one would jump back in.
Yeah, well, it's a prisoner's dilemma then. kind of a thing, right? Like you're trying to guess what the other side would do, and it's right. Like if you
Right.
don't rat each other out, you only get 3 years.
Right.
But if one rats one out, the other one doesn't rat the other one out, right? One's in purgatory and one gets away with it. Yeah.
So back to the idea of like, when does this madness of spending towards the goal of general intelligence, like what do you think they're even thinking about as far as when to start to pull that back?
I think it's, well, two things. One is, and we've heard this from Microsoft and Satya, right? Like talking about the demand signals and that as a good at least proxy for ultimately finding some value creation from all this investment. Eventually we need to pay back all the money we're kind
Mm-hmm.
of spending here with this vision. And so I think
By the way,
demand
on that
signals are,
note,
are one
there
way.
was uh, a research note out. This is from the sell side that talked about, man, I want to give the shop the credit, but I was looking at what Amazon was spending on each dollar that they put into AWS. They got 4 back, and now it's 20 cents. Do you remember who put that out? I'll work on
I
it, but
wanted to say
that whole
Goldman, but I don't
idea,
want to give
like
him the wrong credit. Yeah.
there, to your point, like there's got to be some sort of internally, they have to have something like by 2030, we need to see some sort of an ROI on this.
Yeah. Well, and I think right now, what do we
Uh,
know right now? What we know right
it was
now
Cowan, by
is
the way. I apologize for the interruption,
Cowan.
Cowan.
Yeah. Sorry, Cowan. Um, what we know right now is that there's massive demand and there's supply constraints today. That doesn't mean that the companies are making money on providing these services. Important caveat. But we've heard again, OpenAI with the 4.0 image gen model. They talked about having not enough capacity. XAI recently talked about their servers being overloaded. I believe Google said something along the same lines. So all these companies are seeing huge usage of the product, which is great. They're not making a ton of money on it yet, but I think signal one, like to the broad stroke of your question, right? Like, are at least people interested in using it? Like, what would be awful is like if everybody's like, yeah, we got full demand, you can come use our service, it's up all the time, we never have any problems with
Right.
our servers. That would suck. Like, that'd be
Mhm.
awful because no one would be getting any use out of AI.
Right.
So I
So
think
that,
that's the
I
first
mean,
point. But then to your question of like how far out are they looking and saying we have to see X by X level return by date X. I'm sure there's like some fuzzy thing there, but I also
right.
feel like all of them are investing for the long run. I think they all
Hmm.
have a view that 5 to 10 years from now AI is going to be incredibly valuable. It's almost hard to really put a number on it, and it feels like they're going to kind of feel it out as they go.
Well, being on that list of those 3 companies or 5, however you want to think about them, it's just such a hard place to, if you're not already there now, almost impossible to catch up. And I mean, just look at Apple and look at some of the reporting most recently about some of the capex expectations. I think that Tim might have talked about bringing on, and then Luca, who no longer CFO, maybe looking over more like the infrastructure side of the business now, backed off on some of that. Whether that's true or not, I don't know. But this idea that even a company like Apple that has presumably limitless resources has kind of paused and said, we don't know if it's best for us to go in here and try to be the fourth one, for example. And I think that, as one of the people who are already in one of those companies that are already in the race, I think they probably look at that and realize you just can't give up any ground because, uh, you know, there's something with probably in physics, some law in physics here. If you are half a step behind, it takes 3 times as much energy to catch up.
The effort, yeah. Well, to that point, do you think that Apple is too far behind to really make a, I won't say to make their own model, like that feels like that boat has kind of sailed at this point, but are they too far behind to do something unique and interesting enough to really capture like the personal AI opportunity?
We had a good debate on Friday about this, and the just kind of reading the room, it was, I think people were missing the big picture about Apple's ability to continue to finance and or continue to invest in these kind of themes. So to answer your question is, they're not far. They're not too far behind. I think that I wish they would be much further along when it comes to Apple Intelligence today. I think it's good, but it's not something that I would do with other Apple products I have when I feel compelled to tell other people that they need to buy it. And so I think there's room there for clear room for improvement. Been a lot of reporting in terms of how the different groups within Siri and other AI. And I wish if some of those were true, I wish that wasn't going on. That has a concerning piece to it. But overall, I think they're going to solve this. They recognize the importance of getting AI infused in all their products. They still have generate. It's going to be close to 100 billion a year in cash, and so now I think ultimately that's going to be enough to continue to fund this. So they're going to get there and continue to feel confident that they've got a lens that a lot of people see the world through. 20% of the world's phone population, and I think that they'll get there. And that comes back to a leadership piece and just the importance. Like Tim Cook isn't just good geopolitically. I mean, he really understands the power of getting behind something and staying behind it for a long time. Just look what he did with China in 2000. Their gross margins were mid to high 20%, call it 27%. And most recently, December quarter was 47. And that was all about, I think, really embracing cheaper manufacturing. And so I think he gets it and they're going to get it. And I'm disappointed. It kind of wears thin, defending like this view that they're going to figure it out. But I think it's ultimately the right approach.
Yeah, I think there's still time. And it feels like the biggest threat to them at this point, and maybe to Google too, is probably OpenAI. Because it seems to me that OpenAI has really made a strong push to move toward the consumer.
So
and a little bit away from the enterprise thing. Like, it's ironic though, because also today with 4.1, I think one of the big features in 4.1 was coding, which is more close to an enterprise use case. But imagine a world though, right, where you talk about Google, you talk about Apple, where a lot of them, they have so much of your data already. And then OpenAI is kind of coming in here and saying, we've got the best products, and you could have OpenAI working across a Google device and an Apple device and whatever the third-party devices, where like if you only use Apple's AI, you're limited to Apple devices. I wonder how that plays out.
Let's hold that topic for a different episode because that one's deep, and kind of keep marching on with, where are we at in terms of the AI trade more broadly. And so we don't know where like the finish line is. We do know that these companies are going to continue to spend towards that. And then just the other track that runs in our mind is we're watching these, the market drop or rip or drop, and think about, the dynamic of a recession. And that historically has been the one thing that could short circuit this view that we continue to have a bull market. Historically, that has been the trigger that has caused bubbles to burst. As we think about the recession impact and how tariffs could increase the probability of recession, these are all the factors. But then there's like this side when we just zero in and talk about, well, what's going on with AI. And so let's, if at the highest level, how would you describe, what's the one-liner headline of how AI is right now, how AI is doing it, just in terms of the progression it's making?
The trade or the technology?
Don't worry about the trade, just like the use cases, the like what's going on with the hyperscalers, what's going on with people wanting to, businesses, people wanting to use these. Is it kind of cooled off a little bit relative to what's kind of happened with DeepSeek and now tariffs? That's actually, is it the same? Is it better? Like how would we State of the Union headline of where AI is today?
I don't think we've had a period where people have been more excited than right now. I mean, I think it's so cliche, but the ironic thing about cliches is that they're often very deeply rooted in truth, where like every week does feel like months of progress. It feels like every week we get a new model from one of the big model builders, and that every week that new model has significant advancements. And so I think people continue to be excited. We just talked about all the demand signals, but GPT 4.0 now has incredible image gen, right? Some of the video gen stuff that we've seen is amazing. Like we're getting closer and closer and closer to this point where the average person with no photography skills, no cinematography skills, no coding skills can go to some of these tools and literally just type something and get a pretty good output. It's not perfect yet, but if we keep at this pace, I mean, by the end of the
Right.
year, a lot of these tools are going to be able to do stuff that used to require months and months of coding work, and they'll do it in a few seconds. So
So
I
let's
think
have the
that's incredible. And I
conversation.
think, by the way, I think people are starting to finally realize that, but it just hasn't been reflected at all in the stock market.
Let's take the stock market out of it just entirely and look at what's going on. So you talked about some of the improvements on image gen and some of the coding pieces on early in April. Sam Altman said effectively they can't keep up with demand. Let's see if I can get his actual quote. We're getting things under control because GPT's had more outages, but you should expect new releases from OpenAI to be delayed. Stuff's going to break and slow service for sometimes as we deal with capacity challenges. So that was on April 1st. He said that. Also, they have 400 million weekly users. This is kind of a maddening data point for me because I usually think in terms of monthly or daily. So just to convert that, they do give us an apples to apples comparison. It was 300 million weeklies in December. That probably translates there. So it's gone from 3 to 400 million over the last 3 months. It probably translates to something like 300 million dailies right now. And that, of course, is a far cry. Google search is probably 2.5 billion daily. So you can get a sense about it's moving really well in the right direction, but still a lot of room to go. So we've got what Shopify said, their CEO on April 8th, that every new job has to justify that you cannot do the job with AI unless there's he called it there's a fundamental expectation that we try to infuse AI into all their different roles. I'm going to keep going here because we're taking the market out of it, just looking at what's going on. Now that gets us to April 8th. Google at their next conference said that they're basically on track to be spending what they said before on the CapEx. Microsoft, their head of cloud operations, said the same thing. We had comments from Amazon. So we've heard from Amazon, Google, Microsoft all in the last week that said we're continuing to spend. Now they're not bumping it up either. That's a change. Going into the DeepSeek quarter, before they reported, the expectations were that the hyperscalers are going to spend 20% more on CapEx in calendar 25. That now is 42% more. So they raised that bar up a lot. And so am I missing anything? This is kind of like a common question we get. If you're so excited about AI, show me the money. Like what are examples? You gave some examples about image gen, but like if this is so great and so white hot, why aren't we hearing and using applications more often?
I think we are. I would object to the notion that we're not using them. Like you said, you mentioned some of the customer service examples. You mentioned the Shopify. Shopify's CEO literally said, hire less people because AI can do their jobs.
Fire
What's a
them.
better use case? How could you ask for a better example? You know what I mean? And so I think sometimes when that pushback gets put out there, it's often from people who may not be following the AI story as closely, right? Or
But
they're
it
just
is, I mean,
natural
like as someone,
skeptics.
I'm a huge believer in this. I mean, we're betting our calling. It's not a career when you start, something becomes a calling. We're betting that on that the substance is going to exceed the hype. But I also wish I would see more examples. I feel like there's still few and far between in terms of when companies really stand up. We had Shopify, but companies really stand up and say, this is something you need to take notice of, besides the companies that are providing the tools for it.
Yeah, I think part of that's just still that it's early.
It's
I
early.
think
That's
if
fair.
you're if you're if you're paying attention, right, I think you're seeing the signals. If you're a skeptic, you're always going to ignore the signals.
Right.
And I think the reality is we are seeing it. Shopify, right? I mean, we've talked a little bit about intelligent alpha, but I mean, we've been using these large language models in our own purposes, right, to run various portfolios without much human intervention. I mean, that's kind of the vision. And I think you're going to see more and more and more
Yeah.
of these use cases come up where
Well,
humans are sort of, in many cases, I don't think they're going to necessarily be eliminated in the near term. They're actually going to be augmented. And I've been making the case that I think that the top 20% of human performers are in an incredible place because they're going to get augmented. They're going to be able to do 10 times as much work. And unfortunately, the bottom 80%, that's really where the trouble is going to end up being. They're going to be the ones that don't get hired at Shopify,
right.
right? Because they're not a top performer and AI can do it a little bit better.
That's intense. I just think about other examples. Just personally, my use of Google has gone down dramatically. And this, we recently at Deepwater sold our Google position in part because we think that this transition, we're still going to be a long time away. They've got incredible buy-in, incredible distribution with their search products. We're not suggesting that this business is going to hit the wall by any means, but just this kind of slow grind down where more and more people, that 400 million weeklies goes to 6, 8, goes to a billion, and people just kind of step back and say, that was just easier for me to get an answer. And I think that's at a very basic level what we're seeing. And that kind of, I think, would create some upward pressure within organizations, just like we saw with the iPhone. The reason why the whole developer community came to life is that people got a cool phone and realized that it was a computer in their pocket. And it wasn't just people, it was organizations saying, we got to be a part of this. And I think you're still, despite all of the talk of AI, surprisingly few people use it and really rely on it. And so I'm in your camp. You put it well. It's still early, and I think we can kind of lean on that going forward. So what haven't we covered? I mean, if kind of putting together, you say things are good. I use the language. I think it's white hot. Now it's something else whether the market is going to give these companies credit for it because all the other stuff going on with recession. But I want to end with the topic of the bursting of the bubble. And we're in the asset management business. We work on behalf of our investors, and we're bulled up about what the next 2-3 years are going to look like. But then we also have this, doesn't like the thought of like a bubble bursting out there, doesn't that create some anxiety about the fact that we're involved with this today?
It probably should, yeah. But I think if you're not aware and anxious of the potential for a bubble, you haven't studied history enough, right?
Okay.
Just because something's in a bubble doesn't mean that it's uninvestable.
Or going into a bubble.
Or going into a bubble, right? Yeah, I mean, like I feel very strongly we're nowhere near a
Yeah.
bubble. Some people think we already are. Some people probably think that it's burst already, given what's going on with questions about recession, the tariffs, everything in the market. But I think in all things in life, I think your goal should be to find truth. And if you're someone who ignores all the signals of things getting too crazy, then you're just a momentum chaser, right? And you're going to get burned. If you're someone who's a skeptic that never believes in anything, you're going to miss out on some of the most incredible evolutions and innovations in history and be invested in
Right.
bonds or whatever, right?
So if
Like
you're
ignore it.
overly focused on that, well, first, we could be wrong. Maybe there
Yeah.
is no burst in the bubble. Maybe things are different this time.
Or
And
maybe there is no bubble period. I mean, we're not in a bubble now. Maybe we never gets to one.
right, it
That would
just
be shocking.
we kind of nudge higher, probably higher over time. That's one option.
Yeah.
Option two is the bubble's bursting right now and we don't see it. Doesn't feel like that when you look at the fundamentals. And by the way, I remember the fundamentals when the .com was starting to unwind. You were seeing companies go out of business that were spending lots of money with these advertising companies, and then the whole flywheel just busted. We're not seeing that here. So we're not, but that is on the table. The card's on the table. There's a card that says Doug and Gene are wrong, and that this is the beginning of the end of the AI trade. We're in it right now. And then let's say the card that we're right, that we've got 2 or 3 years of the market rips. By the way, for the market to be up more, that NASDAQ over the last 10 years is up on average 10.9% per year. I mean, it crushes it. NASDAQ does amazing. Given the hole that we're in for this year, for the first 3 months of the year, For the NASDAQ to meet that, it needs to be up about 35% for the rest of the year. Now, I don't know if that's going to happen. I feel like going forward, from here going forward, we will outperform the NASDAQ. It will be better than 12% going forward. But back to the bubble question is, we have this bursting of the bubble out there. We have public, we have private. The public stuff's easy because we pick up on some of these points and then we reduce our position. We make sure that we stay grounded in truth, and we hope that we can see this before everyone else sees it on the bursting the bubble side. But on the private side, you're kind of locked in, aren't you?
You are. Yeah. I mean, I think there's two realities. That one is you find secondary liquidity. I think what's been an evolution, what's new now, right? Like in 2025 versus
Right.
2000 is there's pretty robust and
That's
relatively
true.
liquid
Very
second
different.
markets for a lot of these companies.
So it's not the same lock-in as 25 years ago.
No, nowhere near.
Right.
And the other thing though, right, and again, this is different than 25 years ago, is there's zero IPOs. I mean, there's zero IPO window right now. You'd have to believe that in a real bubble, like bubbles form ultimately on excess liquidity.
Mm-hmm.
And I've always liked the mental model. It was from a John Brooks book where they reviewed like the bubbles in the 60s and 70s, the Tronics boom. And they talked about, what is the easiest telltale sign that you're kind of nearing the end of a boom? It's always that the IPO window is wide open and like the crappiest, worst companies you've ever seen are going public.
No, we're not.
I think that was probably true in 2000. I think that was true in 2021 in the SPAC boom. And that will probably be what history looks like when we look back on the AI bubble. That's the thing you have to look for.
And in fairness to the bears, what they say is that history doesn't repeat, it rhymes. And what we have seen more recently is kind of some run up, like in crypto, for example, and that may be an indication that it's not going to be the IPO market. It would have been the run up in crypto over the past year as some sort of a risk on metric. So, but for the sake of this conversation, we hear that side of the story, and we're still based on this belief that IPO part, when companies go public and you say this company really shouldn't be a public company and people love it and your gut tells you should probably love it, that's probably a sign that you're at the peak of the bubble.
Yeah, I think so.
Well, if we're right, we got 2 to 3 years to go here, and a bursting a bubble.
Maybe more. Could be more.
Okay.
I don't think it's
Let's
less.
say 5 years we'll be talking about this topic, probably at a minimum, and look forward to continuing that conversation. So anything else we should cover before we wrap?
The only last thing I'll just to tie out the public market thing, when we were talking earlier about the performance of AI stocks so far this year, it's been disappointing. We've had this doubt creep in. And I also think it's worth noting, we've talked a lot about this, I won't belabor the point. You look back at .com era, right? Almost a dozen periods where you had 10% pullbacks in the NASDAQ. We've had over 20% in the NASDAQ this year. And what I think is important to remember is that this stuff does kind of go a little bit in cycles. And we did some work kind of looking at how long does it take in some of these past correction periods during the .com boom before we got back to the prior highs. And on average, it takes about 86 calendar days to go from your trough back to your prior high. Depending on how you want to calculate everything that's going on right now, we might still be a few months out. Right. And so I think you have to, if you have the belief that there is a 2 to 4 year period here, 2 to 5 years, whatever it ends up being, you have to ask yourself, are you trying to trade that the entire way through? Or do you just want to be exposed with the belief that AI is going higher? There's a lot more investment to come. A lot of numbers are going to be higher than people expect. But the bottom line, be patient in either case, because it might take a little while for us to get back on track.
That's a good word. On behalf of Doug, myself, and DeepTech, bye for now.